What's going on, guys? In this video we're going to be going over the introduction to Candlesticks basics for Focus Flow Discord, hosted by yours truly, Kumar. Let's get straight into it. So first thing first, we want to go over what exactly a candlestick is. So you may be looking at your screen and you're wondering exactly what's going on. It looks like a whole bunch of coding on your screen. So in this part, we're going to go over what actually a candlestick is. So a candlestick shows price movement for a specific time period, right? It displays four key values: the open, the high, the low, and the close. Okay, so for right here, you can see at the bottom, with this red line I got right here, you guys see right here, this is the candle open. So this is where price starts to move, okay? And when price goes up, price comes to a stop at some point and price decides to close, right? So once price closes, another candlestick starts to form, right? So now the new open is where? Is it at the bottom or is it at the top? The new open would be at the top because this is where it was last left off at, okay? So the open candle is right here at the top, and now it's turning into a selling candle, which is red, as you can see, and it will start to close down here, okay? So each candlestick tells a story of buyers and sellers. Time frame matters. Each candlestick can represent a time frame, so this can be a 5-minute time frame. So within 5 minutes, this candlestick made a bullish move, right? It made a buying move. It went up, right? And this candlestick, within 5 minutes, it made a bearish move. So in 10 minutes total, what happened? Basically, it went nowhere, right? So it went up. It started here, and it went up here. Then it came back down, and it went back down here. So in 10 minutes, it basically show value up to here and stopped up here and basically came back down and closed down here. The parts of a candlestick. So the parts of a candlestick, we have about two parts really. It's only two parts to a candlestick for real. Okay, so you have the body. Okay, what the body is the candlestick that I showed you in the last slide a while ago, which is this green area or this red area. Okay, and now the wick will be this long stick you see right here. These long sticks, these are considered what you call the wicks. Okay, so just like a candlestick, you have the candle, which is the wax, and then you have the wick, which is the part that you light, which is like the match part, right? So consider this as like a candle as a match part, right? The color of the red market is going to be the sellers. Okay, so this is the sellers. The color of the green market here, this is going to be the buyers. Okay, right? So what happened down here? Why? Okay, Kuman, why is there a wick right here? What if this is telling me that this is buying, and this is telling me that this is selling, then why do I have to worry about this? Okay, this is important because this basically tells me that this candle was once red. So this candle was once red, just like this one up here. Sorry about my drawing. It's kind of hard to do this on the MacBook. But this candle right here was once red like this one, meaning that it came and sold down. But what happened? Price shot the market right back up and it rejected this area down here. Okay, so that's what you call a wick. Okay, so if you look over here on the right side of your screen, you can see the market is in a downtrend, right? It's in a downtrend. It came to this area down here below. This was once a red candle, just like these ones right here. 1, 2, 3, 4, 5. This was just the sixth candle. It was red, but before the candle closed, it shot back up and created a wick. This is a sign of rejection. This is a sign of buyers coming in to stop price from going down. I repeat, this is a sign of buyers coming in to stop price from going down. So that is an indication of a reversal, right? So candles coming together can show you signs of whether the market is going to flip or whether the market is going to, let's say, disrespect the zone and continue to go down. Alright, so in this slide right here, we're not going to take too much time on it because we already went over bearish and bullish candles. I don't know why I keep saying bearish first, but bullish versus bearish candles. Take notes. If you're on this slide right now, make sure you're taking notes. You can also keep this slide, keep this presentation so that you can continue to learn, but make sure you're taking notes, okay? So bullish candles are green, bearish candles are red, right? Market psychology is basically who is winning, the buyers or the sellers. It is important to read the context, not in isolation, but you also want to have strategy with it, which will come over time. But for now, we're sticking to the basics. Let's move on to the next slide. Let's get it. Okay, so common candlestick types. Let's get straight to it. So in the market, you're gonna find different patterns with these candlesticks that I showed you before. You know what a bullish candle is, you know what a bearish candle is, you know what a wick is. Now combine all of those together, you get these. First thing we're gonna go over is called a doji. What a doji is basically a doji is gonna show you that the market is being indecisive. It's this guy right here, okay? So what happens with this candlestick, you can see, is the market was once green, and then it went red, and then it came to an equilibrium in the middle where it did nothing. So let's say in 15 minutes it went bullish, and in the next 15 minutes it went bearish. On a 30-minute candlestick, if it closed back inside in the middle, you now have a doji. What a doji is, it's going to show you indecisive in the market. So let's say the market was trending down. You have a higher high, lower low, higher low, lower low, higher low, lower low, and then you come against a doji right here. What a doji is going to show you is that the market is indecisive, and this is a clear sign that it might, I'm not going to say it will, but it might reverse off of this candlestick pattern right here. So then you might see the market reverse bullish, bearish, higher low, higher high, higher low, higher high. Okay, so that's the doji. Next up, we're going to go over the hammer. Okay, the hammer is going to be basically the same candlestick I showed you in the candlestick part of this slide. Okay, so the hammer is this candle right here. Like I showed you before, this is the wick. Market came down once and was bearish. This wick was once a red candlestick body. Okay, it was once a red candlestick bodies, and what happened? What happened was buyers came and pushed the market back up before it closed within that candlestick time frame. So that made the market close bullish. So this candlestick is a bullish indication of market structure. And the same thing over here at the bottom, excuse me, right here next to it, the shooting star. The shooting star is basically the reverse of the bullish candle. Okay, so basically market came up green right here. What happened? Sellers came in, sellers decided to push the market back down, red, which created a candlestick that looked just like this. So the history looked like this. After all of that movement, this is what you get, showing you that the market is more bearish with that candlestick pattern. Okay. Next we have is the shooting star. Okay, the shooting star is going to be right over. Okay, we just went over shooting star. Excuse me. Engulfing, bullish engulfing, and bearish engulfing. A bullish engulfing is basically you have a red market going down, bearish market going down. Then you have a big bullish candle come and take over the highs of that previous candle. So let's say the candle started off right here, right? And a bullish engulfing comes and it sweeps above that open, right? And closes above that open. That's a clear indication that the market is going to trend to the upside. Same thing with the bearish engulfing, is just reverse. You feel me? Just reverse it. Market was bullish, right? It opened up right here. The bearish engulfing came down and took out that market open on that candle, right? So now we have a bearish engulfing. This is, if you see this pattern, that's an indication of sellers. Last, we're gonna go over the I don't see the pin bar on here. I don't know why it shows right there, but we're gonna go over the spinning tops. Let's go over spinning tops. Spinning tops is basically two indecisive candles, right? So this is a spinning top right here, two indecisive candles back to back. It's kind of like a doji right here. It's kind of like a doji. You have back to back candlesticks, which shows indecision. Okay, so with that indecision, like I said, if the market is coming down and you pop into two of these candlesticks, then you know that the market might reverse and start to shoot up, right? So with this and the strategy, you will find your entry and you get inside of a trade and you will make profits up to the upside. All right, so those are candlestick types. Let's get into the next slide. All right, so boom, in this one we're gonna go over the candlestick psychology. So we know that candlesticks show fight between buyers and sellers, right? Next thing is strong bodies equals momentum and confidence. So for example, right here you see this big bullish candle, this big bullish candle. This candle makes me know that the market is now bullish, right? Because it's an engulfing. I see a doji right here, and the market was once bearish and now it flipped indecisive and now it's going bullish. And now I see this big body right here that lets me know that this market is strong with confidence and that the market is pushing buyers into it very heavily. Okay. Next is a series of candles together tell you the story of the full market. So, like I said before, you see this big bearish structure. You got your little hammer right here, and you have the market going up. I said doji before, but that's actually a hammer. But if it's a hammer right here, or it's a doji right here, it's still a good indication of a reversal. Okay. Next, long wicks and rejection equals hesitation, right? So basically, if you see a long wick, I don't really see any long wicks here, but you see a wick right here. You see 3 wicks in the same zone. That basically means that buyers are going to push it up. Simple. One candle means little, patterns means a lot. So if you find a pattern, that means way more than one candle, like I said before. Right? So that's candlestick psychology. Let's keep pushing. Candlesticks and contacts. Always use candlesticks with supply and demand zones. In this video, I haven't went over supply and demand zones. In a separate video, I will go over that. This is just getting you guys familiar with the candlesticks and how they work. Next is going to be market structure, higher highs and lower lows. Multiple time frames, top-down analysis. Top-down analysis is going to be included with supply and demand and market structure. A candlestick alone does not equal a strong signal to get inside of a trade. Like I said, do not get inside of a candle. Sorry, don't get inside of a trade because you see one candle is super green. Or don't sell it because you see it's super green. You're like, okay, it's bought, now I want to sell it now. You're going to get cooked every single time because you're going to be trying to chase the market off of impulse, off of emotion, off of what you see with your eyes. No. Trade your strategy, find a strategy, have influence and have rules for yourself that, okay, if I see these 5 things, I will get inside of a trade. I will not get inside of a trade. You can write this on your wall, write this in your notes. I'm going to type it out right here. I will not get inside of a trade because of that. Because of one candle. I will find multiple confluences before I enter a trade. Okay. Last thing is the confirmation is the key to consistent trading. So confirmation is your confluences, like I said before. Let's get it. Now we have got to the end of this presentation. We are not going to go to the charts inside of this presentation, but please stay tuned for the next video. I will be going over supply and demand and showing you guys how candlesticks actually work. Okay, so if you guys enjoyed this presentation, go ahead and drop a star emoji inside the Discord saying that you learned something about candlesticks with a star emoji, right? And go ahead and stay tuned for the next video that I'm gonna drop pretty soon. Don't wait too long for it. It's gonna be dropping pretty soon about supply and demand and how you guys can use that against your trading, so that you guys could make a strategy and execute to make money in the market. All right. So appreciate you guys for tapping in. My intentions with this is for you guys to learn and understand. If you guys have any questions, please feel free to shout out to me.